Bank crashes are back. Just 5 weeks ago, Janet Yellen gave a speech amid fears of regional banks collapsing, where she said, quote, "The situation is stabilizing and the U.S. banking system remains sound." The New York Post characterized it as, quote, "drooling happy talk." And yes, it turns out Janet lied. Yesterday, the FDIC said it will take over one of the largest regional banks in America in preparation for a bailout, followed by a fire sale to a mega bank. For those following along at home, this makes 5 major banks vanished in 50 days: Silicon Valley Bank, Silvergate, Signature, Credit Suisse, and now First Republic. So what happened to First Republic? Well, they're going through a concentrated version of what all U.S. banks are going through: reckless Fed hikes that gutted their bond portfolios while driving businesses to bankruptcy. That's actually the Fed's stated goal, to crush jobs in order to counteract the inflation that it created. So the loans go bad while the bonds are melting. In First Republic's case, those losses were big enough to scare depositors, who pulled $100 billion out. That's over half of First Republic's deposits. At which point, a cartel of major banks parachuted in $30 billion, and First Republic announced emergency borrowings from the Fed and Treasury, meaning from you, whether you like it or not. But it wasn't nearly enough. Earnings this week showed First Republic is done, unable to service those loans, and the stock plunged, going from $115 a month ago to $2.33 late last night, barely worth a Pentagon toilet. One major analyst guessed First Republic had a negative value of $14 billion, meaning that they owe $14 billion more than they had. So what's next for First Republic? At this point, it looks like FDIC will orchestrate a takeover, probably guarantee all the depositors, especially that $30 billion line from the major banks who expect a return on their lobbying dollar. Then the bailed out remnant gets sold to a mega bank. At the moment, the most likely are JP Morgan, the biggest bank in America, and PNC, the 6th biggest. So another one bites the dust, absorbed into the too big to fail Borg. Now, what's next for the rest of us? Lawrence Lepard had a great tweet laying out the hidden losses across the U.S. banking system, concluding that the entire system is in danger and we could get to the Fed effectively becoming the FDIC, funded, of course, with the only song that the Fed knows, that $1 trillion money printer. The big picture here is that about $17 trillion in bank deposits in America are guaranteed by roughly $100 billion in the FDIC. So that's about 0.6%. Just nobody overpromises like the federal government overpromises. So if losses do exceed 0.6%, given the Treasury is currently already spending down its couch cushion money to evade the debt ceiling, it then falls to the Fed to run all of the bailouts, using the only tool it has, your dollar. You pay more for groceries and rent, but by Jiminy, no banker and no millionaire is left behind. If that is the end game here, then Jerome Powell's job-crushing, economy-gutting, bank loan disemboweling rate hikes will have all been for nothing, canceled out with a fat dollop of banker bailout. A betting man would say that is exactly what's next. Okay, we'll be watching. See you next time.